Yes, 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 yes. Hey, Gerald Peters, welcome back to my channel. This is the video of my newsletter. Kind of weird, but it's a way to kind of go over the newsletter in person. So, not going to be teaching about money or millionaireship or any of that stuff today. I'm going through my newsletter. I trade stocks, I invest in stocks. I consider myself primarily a position trader, and then I do some swing trading. When I say trader, I think ultimately everyone's a trader because you're going to die and your shares will be traded. It's just the time frame that we're operating on. Now, I put out a free newsletter. If you clicked up at the right hand corner of my YouTube, obviously you could see it. So you're already at YouTube. So let's jump in on my channel and see what's going on here. It's usually up here in the right. So this is the last one. Let's pause it. And yeah, it's usually up there. So this is the newsletter. And it's the idea of finding peace. You can always go to thepetersreport.com and see what I'm doing. Inside of this newsletter, I have my entire portfolio. I don't show you where I'm buying and selling. The purpose of this newsletter is to support my book, The Money Flow. And the money flow is basically my trading strategy, my blueprint. And it's not every single little nuanced thing. Some of these things you're going to learn through experience. It's the basic blueprint of how I trade. You can get it on ebook. You could buy a physical copy from me. It's a real nice 8x11 spiral bound book. Lots of charts. I'm constantly kind of updating the book with modern chart pictures, and so they're not all from 2002 kind of thing. I've been doing this strategy for about a decade. After reading just hundreds and hundreds of books, I'm not trying to say I believe this is the only way to trade. It's just a way to trade, okay? And it's what works for me. I do use indicators. Price is the most important to me. I believe that the market moves in 4 stages. It's not exact and pretty like this, but markets can really only do 3 things. They can go sideways, up, or down, right? And what tends to happen is you're going to see it kind of move sideways. We call this accumulation. You're going to see breakouts, and then you're going to see, stage 3, what they call distribution, and then what they call markdown. So what we're really looking for is the markups and the markdowns to kind of give us indication to the direction of the market. I do use some moving averages. I'm a big proponent of the RSI indicator, support and resistance. I do use MACD from time to time for certain things to kind of give me a little insight. So in the newsletter, I'm going to have stocks that I have traded or trading. I have usually a trade of the week when you first get going. So, but let's start at the beginning. There's a YouTube video. That's what you're watching now, but this will link back to them. I do a podcast called The Science of Getting Rich. If you're interested in what I do, Science of Getting Rich podcast. It's kind of more from my philosophies on building wealth and money. Guess it'd help if I didn't break the damn camera. Sorry, guys. You'll see I don't do a lot of editing. This is all like real, what I'm doing live time. So if you DM me, it'll be me responding to you. If you ask me a question, it'll be me. I believe that the ownership of money and property comes as a result of doing things in a certain way. Those who do things in this certain way, whether on purpose or accidental, get rich, while those who do not do things in a certain way, no matter how hard they work, remain poor. That's right out of The Science of Getting Rich. I have a text service. I'm still playing with that, if I'm going to keep going with that or not. It just seems to make people ask me lots of silly questions. So, when you first come into the newsletter, you're going to see some new trades that I've positioned. I'm already getting a lot of people like, Gerald, can you make this easier for me? It's literally like they're like, hey, could you come to my house, tap on the door, open, and then sit me down at my computer and make me type these in? Like it's almost on that level. I don't need to email this to you. It's called thepetersreport.com. You can go to it anytime. Why people feel like they have to be notified every time. So if you're following along with my book and the strategy, then you know how it works. This is not a day trading thing. You watch the charts every day, and when they set up, the next day you put in your order, okay? So Twitter is one that we follow. It's given us a buy signal, so I made my first buy. Public storage is one, and then I'll give you the page 15, 16. So if you come over here to page 15 and 16, you're going to see the chart. And what we're looking at. So Twitter got blasted after earnings. I like to come in, anything that moves this big, I have a rule called the 10% rule. Anything that drops 10%, you got to wait at least 3 days. During that 3 days, you should be doing your due diligence. You should be reading what happened to the company. Is this that big a deal, or are things going to be okay? And so I initiated a position. If the market is just steadily going down, I like to wait until at least I get one up candle, which we did right here. So now I've taken a position, and hopefully we'll see the pattern that I like to see. Same thing in PSA. Again, these are new trades. So I would take a tiny position into this area, hoping that what's fixing to happen is we're going to put in a stage 1. Eventually it'll break out into a stage 2, and price will return to the nearest previous high. So let's go back to the beginning here. So that's what we had going on there. The market status section of the newsletter is top down. Now, 3 things are going to move stocks. Number 1 is, where's the overall market going? Number 2, where's the sector in which the stock that you own going? And number 3, the actual stock itself. And so the S&P 500 is on a breakout right now. But notice I wrote extreme RSI reading. So if we come over here to the S&P, which I track, and the reason I track it is I call it the wind. In other words, this is the wind at your back. And I try to update as we're going through here. I've closed out. I had a triple long swing trade. We got long right here when price closed above the 20. I didn't get a chance to get in here. It didn't get quite low enough. I needed price to come down. It's very logical with support being right here and the 200 right here that it should have come down, and it didn't. If it would have, I would have gotten long here and then on the breakout. That's where I'm looking to get long. And again, it's not some magic about the moving averages. It's price. It's price setting up against support and resistance, and price breaking out above, breaking out. So didn't get a chance to get in the first buy zone. Doesn't make me feel warm and happy about the second buy zone when resistance was right there. We did break out. We're right here. I took that trade off. If we were to pull back into this 20 and hold this and then turn back up, I'd be more than happy to get long again. So that's a swing trade. That's opposite of what in the back is what I call my core holdings. Now, inside of this portfolio, I'm running about $420,000. This portfolio produces, we can zoom in here, approximately $2,700 to $2,900 a month in dividends. These dividends are reinvested according to the strategy in my book, The Money Flow. And so these are common names that you've heard about. The portfolio runs a little hot in that we have some REITs in here. Let me get the thing. Sorry for the movement here, guys. I own some common names: Pepsi, Southern Electric, Verizon. This is a mortgage REIT, 10% yield. BX, McDonald's, Well, MO, Chevron, VTR, Starbucks, Intel. You know a lot of these names. You may not know some of them, such as, when we were, Campbell Soup may not be high on your list. Hanes Brands, International Paper. I'm buying these on extreme lows. So much like you saw on the Twitter chart on page, so like this could go into my buy and hold, but it's not low enough for me to put it into my buy and hold. For me, this needs to come down a lot more based on fundamental knowledge, not based on just the chart. And the value of what I believe this company is valued at, it's kind of fair value here, but as a trade, it could easily push back up into this support zone. So as a swing trade, I'm getting into this with a target right here. But as a long-term buy and hold, I'm not that excited about it. So that would be a candidate for a swing trade. It wouldn't make it into this portfolio. Make sense? So my top 5 holdings are MO, AG&C, SO, Verizon, MFA. That's a lot of yield. It's like a 5.5 on average. I did some trimming this week. I sold some SO for a 20% gain, and I put some of that into VTR. So what does that look like? Okay, so this is like right out of my book, and I'll show you that on the charts here. So when I'm selling SO, I'm selling up here after these huge run. So stage 2 breakout, stage 3 topping, possibly stage 4 forming, which technically it is. It's below the 20, and now we should move down. So that's right out of the, let's get page. And this is a pattern that if you're following along with me, you'd want to memorize. So sideways, breaks out, sideways, breaks down. So we're going to see that on this chart here. So let's do some drawing on the indicators. So if we just take some basic lines, let's do trend lines. You have a breakout, and then now we're going sideways. And then you should have a, well, and then we're going to break down. And that could come down how far? I mean, it wouldn't be unreasonable for it to come down to what? My target is always previous support. Now, you could say these are support levels, and that definitely is one. See how it's holding that? 1, 2, 3, 4, and then it turned back. So it's a very good possibility this just moves sideways and then breaks back up and heads up, or it could break down, right? And so that pattern holds because it could stair step, sideways up, sideways up, sideways up, and it could stair step. Same thing on the way down, sideways down, sideways down, sideways down. So on that Twitter trade and on that PSA trade, you have to be aware that it doesn't have to turn. We don't know the direction of the market. No one does. Now, if it breaks out, if this holds and goes up, then we got to assume it's going to keep going. And so I make some assumptions. They're not predictions. There's a big difference between assumption and prediction. The assumption is if price breaks support, having camera issues today, guys. If price breaks support right here, my assumption is it goes to the next level. And then if it breaks that, my assumption is it goes to the next level. If it breaks that, my assumption is it goes to the next level. And so I'm making assumptions, not predictions. And so I want to trade in the direction of the trend. So when price broke out over here, cleared this previous high, I make the assumption that it's just going to keep going up until it doesn't. And it did. I mean, it just keeps going up, 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 up. So that's kind of how I handle the long-term portfolio. I rarely sell. I only sold on SO because I had such gains in it, and it is an electric company, for all God's sakes. And I took some of those gains and put it into VTR, which, let's look at VTR now, which is a REIT, similar yield. And if you see the price difference here, it got smashed. So I happily owned it at 73. Now it's 59. That's a huge, big down, right? So now I'm taking advantage of that, my profits in the electric company, to transfer, not all of them, just some of them, over here to this stock. And so this just manages the portfolio. It rolls the yield forward. I take profits in things and roll them into other things that pay dividends. Make sense? And on here, I have a few rules. 3-day rule, price drops more than 10% a single day. I don't know why this messes people up. I have people say all kinds of crazy things to me or what they think it means. It just simply means if price falls in a single session, 10%, you got to wait 3 days before you do anything. That gives you time to read and figure it out and let everybody get out of the stock. I kind of do something similar the opposite direction. If I wake up and a stock I own pops 20%, I'm going to sell some at the open. Be assured. If it's one share, I'll sell one share and consider I just bought myself dinner. It's a windfall rule. So it goes both ways. If you notice on here, my goal is to accumulate shares and create cash flow from dividends, not selling in fear simply because the market sells off or overpaying for shares when price goes high. So the way that I handle this portfolio is different than the way I handle my micro trades. And that's nuance sometimes I think gets lost on people. There's a section in my free ebook, You Don't Have to Die Broke, where I talk about the dogs of the Dow strategy. I really like this strategy. And what I like to do is follow the dogs. Now look at the dividend yields on these. These are the lowest priced stocks in the Dow Jones Industrial Average. These are the 10 that have done the worst. Often price reverts. And so going into the next year, the ones that did the worst, value players come in, they buy them, and those stocks end up doing the best. And they come off the list. So I like to follow them with the strategy that I put out in my book. Currently, according to my book, The Money Flow, Cisco, IBM, and Pfizer are in the buy zone. The rest of them are not, according to my strategy. So I would wait until they hit the buy zone, and then I would buy them. That's what I do. Trading lesson in this week is on KB Homes. You see this beautiful, see this support zone? Stage 2 breakout, runs up. I put these levels on because now we did, here's our state distribution. Here's our signal. Price had gone too far, too high. This is also an example of, even though RSI pops up here, look what happens. Price keeps going. So I like to respect RSI, and I like to add a little bit on the lows, and I like to take off a little bit on the highs. It's not saying the trend's over. I just shave it, let it keep going, shave it, let it keep going. By the time we get over here to the stage 4 decline, I've taken profits in here 2 or 3 times, and I'm out. And I'm out. Now, if this is a core holding, I'm not out. I'm going to wait until it pulls back. Very conceivable, we broke this line. You're going to pull back to right here. So I assume this stock is pulling back to the $29 range. It's my assumption. I can't even begin to look at it until this gets on an extreme like it did over here, which was the bottom. See? And so this is kind of my strategy. I need price to pull back. It may not get to this 29 level, but this has got to be on an extreme. And even then, I'm only going to take a small position, realizing these things take time to play out and do a long position swing trade that could take months. An example of one that has taken months, let's go to KHC. Stock gets smashed in these zones. And so this is one that I hold a core position in, that I've been just accumulating in these low zones, anywhere in here. But now remember I said, you don't even have to bother until you get a black candle. Unless you just want to, but understand, if all you see is red candles, you're probably going to see another red candle until you don't. And that's where it played out. You could be even more conservative, and I do this sometimes where this is where the MACD can come in and help you out a little bit. After a huge smash on the chart, you're like, when should I get in? When should I get in? You can be conservative and wait till over here. But, I got in right here. First black candle on a big down day. So, you come in. I'm recording. You're fine. I can't pause. What's up?
You interested in a house that needs to be moved? They want to give it to him. And cost about $11,000 to move it.
Where's the house at?
Over by the Catholic Church.
Who's this?
Larry just called me.
Yeah, how fast will we have to move it?
Within the next couple of weeks.
Yeah, I'll go look at it.
So he's gonna send me some pictures.
Yeah. We could move it over here maybe.
Well, that's what I'm wondering.
If we could get Joe fast enough. Sorry guys.
All right.
Cool. I'll be ready. I'm just doing a recording quick.
Okay, bye.
So someone just came in and asked if I wanted to buy a house and move it. Said it costs about $11,000 to move it. I own some land, so that might not be a bad idea. Interesting. Back to what we were doing. So I'm looking to accumulate on these. And if you were looking to take profits, this would be where you took them. And look, you bought here, and now you're up here. And you blew through this previous high, which would have been my target. So the first day I probably would have done it was right there. I shaved just a tiny bit on this because I've actually bought a little more than I wanted. And so you see how the strategy worked out. And so in this situation, one of my long-term buy and holds actually gave me a little cash. So I was able to buy here, and then I had too much, so I sold some here. And then I've put that into VTR, which is, like we said, a long-term holding of mine that's really down. And so I was able to take profits in one to add to another. So I think you can see how I do that. That's part of what I call the money flow out of the newsletter. Anyway, this was just the lesson here was don't be so fast to act. Let these things come down. The market cycles. Prices move up, prices move down. We have a thing in my newsletter that I call the micro trader. And these are trades that I'm swing trading. These are small positions. I mean, you can dictate, what's good for you. I do some of these at a lower price just to trade along because a lot of my followers don't have as much money to trade. I mean, the market's fractal. Add a zero, add a zero, add a zero, right? You can get as much as you want. So I trade in and out of these, in and out of these, in and out of these. And if you notice, I say use no stop loss on at least one share. I want to keep it on your screen. I want to keep it on your chart. I want you to stay with the same stocks. This is just something I do. You don't have to do. I buy in groups of 3 or lots of 3, so 33 shares, or let's say it's 100 shares. I would divide it in 3, 33. And as you notice, I'm looking to buy first on the lows. So we got one here. We got one here before the breakout came here. So I would have bought, and bought, and the upside target is right around in there. Make sense? So let me take this up a little. Hopefully that makes a little bit of sense to you. Now this is in lift, and that chart is somewhat squished. So let's back this up. And lift is my trade of the week. I do a trade of the week. Last week was God damn. Sorry guys. I got this new phone holder and I'm still getting used to it. If you bend it just right, it'll pop it out. So low, here's our breakout, and now we're here. I mean, this may give us some resistance, hopefully not, but it will probably. This previous high here, that's still a nice trade. We still should be in profit, and I mean, what is that? That's $7 higher. So I'll probably take a little off here. I'll take a little off on a stream RSI. My long-term target is 66. Price has memory. It can go back to where it was. Morningstar fundamentally actually has a $22 or $74 price target on lift. This is my trade of the week. So buy $600 worth, buy $4,000 worth, whatever's in your, whatever you want to do, right? And so you'll see the ones that I'm trading. So I'm following these every day. They're different sectors, different things. We got Netflix, we got Roku. These are streaming one plays. I've got Square. Obviously, this is like PayPal. These are electronic payments. I've got Lyft. I've got Starbucks and McDonald's. Is McDonald's on here? No, McDonald's should be on here. I just took it on as a swing trade. I don't know why I didn't. Glad I just caught that. And again, I don't charge for my newsletter, so you're going to see me mess up on things. You can always contact me, email me. We got Adobe in there, some techs. We got some cigarettes just because, they've gotten so beat up. Delta, Amazon, UNH, FedEx. We've done real well in these UNH, FedEx. These are medical delivery. I swing trade the S&P 500 using the UPRO. I don't short. There's no point in even talking shorting right now. We're in a crazy bull market. Twitter pass Taco and Denny's is just a fun play on the restaurant stocks. If you look at McDonald's, you're going to see a huge downturn. This is one of my core holdings. We got in literally here and here. Now we're starting to see a turn. This thing will run back up. Could easily get back to 220. Starbucks has the same chart. It's in the same business. Stage 2 breakout, stage 3, stage 4 decline. Here we are. You can accumulate here, here, and here. So you've had a couple chances now. A more risky, higher return possibly is Taco. Same problems going on. We've got an $11 target and then a long-term target of 13. So, I mean, that's a 100% return if that worked out. Probably won't get that good, but Denny's, same chart. Another big brand, Yum Brands, same chart. See, so that's in a sector play, and I'm just looking for a little more juice by playing Taco and in my trade account, and Denny's in my trade account. In my buy and hold account, I've got McDonald's and Starbucks. So, and then I would just accumulate. And the beautiful thing now about commission-free trades is you could literally, in your buy and hold long-term account, buy one share, one share, one share. You do this every time they get smashed over your lifetime, you're going to build a lot of wealth. So let's wrap up the newsletter. I trade AG and C around a core position, I hold a large position in AG and C, $50,000-$60,000 positions. I trade using the strategy, and if you see here, I took profits on 11.5 right in here on this day. The target was 17. We hit our target. Now we're on an RSI. I've been scaling back. I am now at my core position. So if this thing wants to go higher, great. If it wants to go lower, great. I hope it goes lower. So I doubled down. I mean, not doubled down, but this was my first chance to buy on the low. And then I bought on the breakout. The rest of it, we've rode it up, hit the target, scaled it out. This has been a perfect trade. I made about $2,500, collected 2 dividends. And now I'm back in my core position where I'll collect my little $100 a month to own that stock. I do a similar strategy with CEFL. I take thousands of shares. This thing pays 17 cents a share, pays monthly. It's a 2 times leveraged fund. And I've been doing this live on here. I go, basically, I'm almost all in here. I'm all in on the breakout. I look to take profits on the highs. If we get into a stage 4 decline, I start taking shares off to where I look to put them back on, to then put them back on the breakout, to then take them off on the high. Now, it doesn't always flow this perfect, but it has been. You notice on this one, I got out over here. It didn't come down far enough, so I didn't get a chance to get back in on the lows. It turned around, and then I got back in, all in, basically right where I got out. I may have lost a couple bucks, and now we've moved up, and RSI has gone on an extreme, and I took some profits. Doesn't look like there would have been profits, but because my position sizes are so large, we did get a little profit here. And now we're sitting here, and I'm at about 3/4 position. We are above the 20, but we can't seem to get over this high. And with the position of the S&P 500, I'm just a little uneasy to be fully committed here. So I like to be fully committed after we come down, not going up. I want to sell into strength. I want to buy into weakness. That's basically my trading strategy. So we got some lessons. We got some micro stocks in play. I cover the dogs of the Dow in my personal portfolio. And then I do cover Bitcoin, where Bitcoin's at, as far as what stage it's in. Some swing trades in the back. But I mean, that's the newsletter. It's all free. Connects to a weekly video, connects to my podcast. If you click my name up here, it'll take you to my free resource page, which has a link to my podcast. You can get a free copy of my book, You Don't Have to Die Broke. If you want a copy of my trading manual, you can get it inside the newsletter. You can buy it here. Ebook's only $25. Hard copy signed by me, shipped to you, is only $45. If you buy my books, obviously you can talk to me anytime you want. DM me. I have a lot of followers that text me during the day when the markets are moving. Hey, what do you think of this? That's cool. This here is called the Peters Report. That's what we're just looking at. My YouTube channel, which you're probably at if you're watching this. Science of Getting Rich. If you don't have a copy of this book, you can get a free link there. My 10 Pillars of Success. Here's a link to that I'm playing with this here. And this is a new podcast. I don't know if I'm going to keep it going or not. So anyway, that's all about me. Yes. Hope you have a great week trading, and God bless.